Hello, people. Sorry, I with this YouTube, I feel like I was maybe just staring there for like 2 minutes. Morning. I was just waiting to get confirmation that this thing was actually working. So apologize for just absolute inactivity here. It's Thursday, March 28th. It's the final day of the week, the final day of the quarter, the final day of the month. So here we are. We've finally done it, right? The first quarter of 2024 is officially over, and the markets have just pressed into new highs, record after record. Tomorrow markets are closed. We have PCE pre-market. Fed Chair Jerome Powell is going to talk tomorrow as well. So what a day to close the markets with all that news coming out. This morning we had GDP. I think it was the quarter over quarter final rose, I think 3.4% versus 3.2 expected in the US. So pretty good figures from that, and just records, right? We're closing out the first quarter. The SPY is up about 11% in the first 3 months of the year, already hitting the 5,200 mark on the SPX, and that even puts a lot of more. It's more bullish than a lot of people predicted in 2024, and there's more to it, right? There's probably going to be more to it. Any weakness hasn't continued for more than several sessions, with dip buying and fresh money continuing to come off the sidelines. So if we look at this on the weekly, right, look at this week. The start of the year, we had the first week was red, right? And ever since, we've had 3 weeks of red out of all of these weeks in the first, what I assume it's like 12. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Oh, so, no, that makes more sense. 14 weeks. So many green weeks. There's about four that were red throughout this whole time. We're up about 11% in these equities, and all weakness is just getting pushed back up, right? Everyone that just keeps selling, loading on puts, is propelling upside momentum. So it's not that it's only an AI revolution and the Magnificent Seven or the Super Six minus Tesla, but all of the 11 sectors in the S&P have risen on a year-to-date basis, except for real estate. The momentum has even recently spread to other indexes like the Russell 2000, and records also haven't been limited to stocks, right? Bitcoin rallied super aggressively, gold into new highs, and a rally spread across all asset classes. So the timing of rate cuts, which was a paramount importance last year, has become less of a concern, largely because the economic resilience that we've seen so far this year has just been robust, right? The first expected rate cut was positioned for March at the end of last year, and as we saw, we're now almost April, right? A few days left and it's going to be April, and we haven't seen a rate cut yet. The probabilities for the first cut in June have increased slightly, but again, it doesn't seem like there's that much in it. So the market is closed tomorrow, like I mentioned, for Good Friday, meaning that today will be the last session of the quarter. And according to the Dow Jones market data, when the S&P notches 8% gain or more in Q1, it is nearly assured to finish the rest of the year on the right foot with an average advance of 9.7%. So in the following three quarters, so 10% higher? Maybe. Probably more. So also remember that it's a presidential election year in November, which usually is positive for the markets regardless of who is declared a winner. So all the bears out there waiting for this massive downside leg and this crash, just keep that in mind. Statistics and data say otherwise. So in other news, right, if we talk about the central banks, like I was mentioning, there's no real rush for the U.S. central bank to start cutting interest rates. According to Christopher Waller, the risk, he's a Fed chair, or a Fed governor, the risk of waiting a little longer is significantly lower than acting too soon, he added, and citing that the strength in the U.S. economy and resilience of the labor market. Waller also pointed out that the recent economic data, which has made me uncertain about the speed of continued progress, implementing rate reductions too soon could risk a resurgence of inflation, meaning that we could hold on to this 525 to 550 bips for quite some time, right? This target area for longer. In terms of crypto, right, we should probably move into that space as well, but the main headlines that were being made: Sam Bankman-Fried, the disgraced founder of collapsed crypto exchange FTX, will hear today. how much time he'll spend in prison. Back in November, SBF was found guilty on all 7 counts, 7 criminal counts related to fraud and conspiracy as part of the scheme, a scheme U.S. Attorney Damian Williams referred to as one of the biggest financial frauds in American history. So federal prosecutors are recommending a sentence between 40 and 50 years, while lawyers for the former crypto mogul are pushing for a term no more than 6.5 years, with the expectations that customers and creditors will be paid back in full. So we'll keep eyes out on that. In other news, there's not too much. Realistically, we're going to wrap up the week with Chicago PMI consumer sentiment, pending home sales throughout the day, and then some other stuff towards the end of the session. I'm fairly bullish leading into this. Right now, we're pretty much hovering at yesterday's close on the S&P and the NASDAQ, right? We're not too far off those levels. With the NASDAQ, what we can see is there's slight little declines, like lower highs continuous. The real bull starts to open up back above 18,540 on the NASDAQ. So a nice little rally to hold 510 to begin with, 540 above that. We could start to see those buyers start trickling in a little more aggressively, as long as we hold 18,440, 18,450 on this weaker market, because there's a lot of money coming out of tech. We saw, Nvidia. Remember, Nvidia is up like 1 billion%. I think nearly 90% into those all-time highs from the start of the year. So there's some kind of rebalancing from there, right? Prices are getting pulled out of there and put into other assets, other tech assets, like Apple catching a bid, for example, Tesla catching a bid. So big tech right now is seeing a little more weakness than other markets. But as long as we hold those key levels on the S&P, on the NASDAQ, I think that we could press into a nice move to the upside towards the end of the day, rallying maybe 100, 150 points higher, which is something that I'll be looking at. In terms of the S&P here, let's see. In terms of the SPOOs, yesterday's rally with traders stuck into lows, right? Was it this expected? Maybe not, but was it expected to see 20, 25 points higher from those lows getting trapped? Yeah, I think so. They are really trapped into the lows yesterday. A lot of sellers down there, a lot of volume, B shape on the profile. We're extremely close to all-time highs. We can go and test that all-time high realistically, in my opinion, at this point. As long as we can hold that mid-90, 52, 93, 4 area, if there are any pullbacks, great. I'd honestly rather them just start bidding it from these traders that are kind of getting trapped into the 5303 here pre-market. We've got the temporary first area of interest coming out at that 12 area, and then naturally at that 5320 to see a leg higher. And targeting for me at the end of the day is going to be a new all-time high. So let's see if that manifests. Let's close out the quarter very, very strong. And Marco, yeah, of course. The neck crack, to begin the day. I hope you're all doing well. Enjoy the holidays, right? If you guys celebrate Easter, have a great long weekend, Easter weekend, and we will chat soon. We'll chat back on Monday, most likely. And I'll see you guys next week. So have a great weekend. Enjoy the gains that the first quarter brings. Unless you're a bear, then you're probably a bit sad. But let's continue this momentum. I'll see you guys in there. Check out TradeProAcademy.com and community.TradeProAcademy.com. Community.TradePro. I butchered this. Community.TradeProAcademy.com for that free Discord, and I'll